You're probably, I hope, listening to some of the conversation we're having earlier, just playing out what is now turning out to be, I mean, horrific is maybe the wrong, I don't know what the right word is, but let's talk about the implications for the oil markets. We're watching WTI this morning, obviously continue to move up. How do you see, I mean, do you see an off-ramp? What does this look like to you?
I mean, there does not look like an easy off-ramp at the moment at all. I mean, we've had 1 million refugees fleeing Ukraine, and we're already into week 2. As you mentioned, shelling, the largest nuclear facility in Europe, have seized control of it. I mean, there's real concerns about, will they shut off power for the South? But also, this is just one more very, very unpleasant reminder that we're dealing with a nuclear-armed nation that has already put those weapons on alert. So we don't know how this is going to devolve, but it is incredibly concerning. I think the other issue is, if they do attack a NATO country, a Baltic country, this becomes, internationalized very quickly.
You've talked about Russia being not just a gas station, but a commodity superstore. I love that. I love that comment. And so but it makes you start to think about what will be the inflationary pressures. We've been talking, we're going to get the jobs number later. We've heard from Jay Powell this week. How do you think this changes or should change his outlook for everything?
I mean, again, this is not going to be a short conflict. First of all, you had people in Europe, a month ago saying he wasn't going to invade. And then there was a sense that energy and commodities wouldn't be disrupted. But what we're seeing right now is self-sanctioning, a divestiture movement, as companies simply say, I'm not going to touch Russia. And the Oxford Energy Institute was out this week with a very, alarming report that essentially said self-sanctioning alone is likely to take off or potentially take off 3 to 4 million barrels of Russian energy exports, 70% of Russia's energy exports. So we are potentially looking at a very serious hole in the oil market that cannot be easily filled by countries in OPEC or the U.S. And then you look to the food markets. I mean, look at what's happening with wheat prices, highest level since 2008. And there are concerns that those ports in Ukraine are going to be inoperable. And so this is a serious, serious inflation story.
Shepard Smith here. Thanks for watching CNBC on YouTube.